Joining us now is Gautam Shah, who's a founder of Goldilocks Global Research. Gautam, as always, thank you so much for taking the time. Alex here, good morning to you. What do you make of the kind of run that we've seen in the very recent past? And also, if you look back a couple of months from 7th of April, broader markets have moved up very, very smartly. Where do you see the move in the near term? Do you expect a little bit of consolidation after this sprint?
Good morning, Alex. I think it's quite astonishing for a lot of people that despite all the geopolitics that we went through, you have the mid-cap and the small-cap indices close to lifetime highs, and you have the Nifty 2% away from lifetime highs. So I think the market has been the best judge of geopolitics because the more common sense you use, there was no way you could have participated rationally in this market up move. But I think the price action has been supreme, and the price action has told you all along that the trend is intact because actually the market has been making a series of higher tops and higher bottoms, and we had a lovely 5-week consolidation where the Nifty stayed in a 500-point band. It got a lot of people frustrated because the index was not going anywhere, but the stock specific action continues to be solid. So as a technician, I still don't see any negative signs on the charts. I think the market is clearly headed even higher from here. The momentum is great, the liquidity is phenomenal, and there is excellent support coming in from global markets, particularly the US, which are already close to lifetime highs. So I think 25,600 was our working number. We are almost there. It's a minor resistance, but I think this market is headed for 26,200, which is the lifetime high, and we really review it there. Any which way, this is not about the Nifty. I think the rest of the year is about being picky about stocks, being in the right themes, right pockets, and I think that's where real returns will be made.
Okay, Gautam, very good morning, and always great to have you on the show. You know, I'm just wondering if you see the broader market sort of join in, or is this a large cap kind of rally that we're seeing? Because broader markets have been sort of sitting it out for the last couple of days. Where are you seeing those strengths as far as, you know, the non-Nifty companies are concerned?
Couple of days is not important, Tamanna, because I think broader markets had run up quite a bit while the Nifty was in that consolidation phase for 5 weeks. And I think the large caps and the Nifty had to follow suit, and that's really what has happened in the last few days. But I think this is a bull market where you have to think like a test cricketer and not go about things 2020, because you know it's about buy and hold right now, and that's how real returns and larger returns will be created. So I think the rest of the year is about broader markets. While the Nifty can make new lifetime highs, go even significantly beyond that, but in percentage terms, I think they will keep finding headwinds from time to time. So small cap index, mid cap index, I do see them hitting lifetime highs. I think 51,000 is the level for the 21,000 is the level for the mid cap 100 index, and I think you know, once we are past that number, which we already are, I think you'll see significant upside.
Okay, now viewers, the reason why this is important to get Gautam today, and I think the reason I'm very excited about it, because the last 3 days, and Gautam, if you see our show, you will know that we've spoken about this on the morning show enough times that when the markets were sub 25,000, Gautam Shah was one of the people who came out and said that 25,600 seems to be on the cards and we'll take it from there, right? I distinctly remember your words. It's just eerily spooky, or whatever you call it, Gautam, that we are at 25,600. So now let's take it from here. Do you believe that there are levels in sight in the months of July, August, September?
Thanks for highlighting that, Neeraj. Yes, it did work really well. And I think we went through the Middle Eastern crisis, and our targets on the upside were questioned. We ourselves questioned ourselves because, you know, it was not the best scenario in terms of news flow. But again, price action wise, it's been spot on. Momentum is great. Breadth is great. Market continues to hold on to support levels. There is so much support coming in from everywhere around the world. 25,600 is just a small stopover number. I don't think it's going to be a problem. I think we are still headed towards 26,200, which is a very important number because it was the lifetime high. I mean, it's the number that we tested in the last week of September last year. There could be some selling pressure, but the way the banks are placed, the way metals are placed, the way IT is looking placed, the way real estate is placed, I don't think this market is stopping out anytime soon. So I think for the next 3 to 6 months, it looks like things are sorted unless something completely out of the box comes our way.
Gautam, just wondering what you're making of this, because it's just the flavor of the moment. All of the paint companies, and if you've looked at an Asian Paints, Grasim, it's been an interesting race to follow. And JSW Paints has made the cut, AkzoNobel in the bag. Is this a space where you've seen any kind of movement or interest at all?
Not at all. It's been an underperformer for 3 years now. People kept using the flag of fundamentals, but it's in terms of relative strength and outperformance has just not been there. And many of these stocks are still very, very expensive. In fact, the entire sector is expensive. So I wouldn't go that way. I don't think consumption is really a theme, which was the theme in the earlier move that happened in the last couple of years. I think today's market rally is about different stocks doing well. I mean, look at financial services. Today, we are at 58,000 on the bank Nifty. And I think the bank Nifty, our working target all along has been 60,000 and beyond. And not just the bank Nifty, insurance stocks, housing finance stocks, NBFCs. Look at where Bajaj Finance is today. So I think our three favored picks are financial services, real estate, and metals. And I think this is where serious returns will be made over the next 6 to 12 months.
And Gautam, want to take further questions, but I just wanted, since we're on the topic, just wanted to make this point. Maybe, guys, that the paint sector now sees divergent moves because the trailing 12-month PE multiples, Asian Paints 56 times, Berger Paints 56. We can't quite qualify Birla Opus valuations because it's a part of Grasim, so you can't do that. AkzoNobel was 33 trailing PE this morning. Assuming there is a 6% uptick, right? There is, in fact, a 6% uptick. It trades at 35 times with a large balance sheet and an aggressive promoter now behind it. One would suspect that just an apple to apple or orange to orange comparison, the rally may not be over in AkzoNobel. People might now preempt that the valuation multiples for AkzoNobel, which was a sleepy MNC management, turning aggressive, might lead, if not the entire catch-up, then some bit of a catch-up. This may not be the end of the rally.
Specifically on the valuation
7% market share is what they had.
Yeah.
I'm just saying 7%.
Yeah, so there's not the sleepy management, Tamanna.
And even with JSW coming in, they'll still right now be close to number 4. There's some ways to climb.
100%. But is JSW Paints, or even if it in Asian Paints would have bought it, would have been a sign of an aggressive large management coming and replacing an MNC sleepy management?
Yeah.
And that is a case for valuation re-rating.
And ultimately, you're also talking about distribution networks which will ultimately be aligned between the two, and so growth rates and volume growth for one can be extrapolated to the other. I'm just saying. So therefore, the slower growth for Akzo maybe is a thing of the past. It might take a couple of quarters, but then certainly that valuation argument has to be made. And that I think will play out already. There you go. Neeraj, while you were talking, it's moved from 4.5% higher to about 7% higher. So certainly being talked about and being acted on as well. I want to come back to you, Gautam, and you spoke about the paints pack, but I wonder what you have to say about a couple of other stories, right? So one, you've already spoken about, or have you spoken about BFSI? We have in the recent past, and the fact that Nifty Bank is at all-time highs. But I want to talk to you about IT, because it's been a hot-cold kind of a scenario over the last few weeks. And you know, we've been calling it tic-tac-toe on an ongoing basis because that's exactly what's panning out. And today it's up and about. Would you pick any of these for a concerted up move?
No, Alex, we are staying away, and we feel that there are a lot of headwinds for the entire IT pack. They might do well from time to time, but I don't see it as a structural trend. And I think anything that has to do with external factors, I don't want to commit into that right now, given the kind of world that we live in. And many of these stocks are very, very richly valued, and any negativity, it leads to a derating really, really fast. So I don't see alpha being generated in IT, and we've stayed away completely out there. But I mean, speaking about financial services, I think that's the poster boy. And given what the RBI has done in the last 3 months, which caught really a lot of market participants by surprise, I think that's the trigger for the entire financial services, NBFC, insurance companies to do really well. Valuations again is very comfortable. I mean, look at FMCG, look at consumption as a basket, look at IT as a basket, look at pharma as a basket. These are all baskets that are very richly valued, and they have been non-performers in the recent past. So the message from the market is clear that it's value over growth at this point of time, including the entire PSU pack, which I think will do very well over the next 1 year.
Okay, so banks and PSU. This is interesting that you say PSU because we had a banking analyst earlier who said stay away from the PSU, stick to the privates. What about the gold financiers, the NBFCs? Gautam, do you think that that is untapped territory as far as the whole BFSI pack is concerned?
Well, I personally feel that the entire PSU pack is going to see the next wave of the long-term uptrend that started 3 years back. They all became multi-baggers for a couple of years, then went into a consolidation phase for about 6 to 8 months, and they're all coming back very strongly. I mean, case in point being some of the top PSU banking names, the kind of valuation that they're trading at, the kind of earnings visibility that they have, the kind of management commentary that we've heard recently, and the RBI stance, I just feel that this is a very big opportunity across the board. Power PSUs, defense, some of the selective defense PSUs, and obviously the PSU banking names. So this is the pocket which I really like on an overall basis.
Pull up some of those PSUs as well, and let's look at the PSU banks as well. What about the index itself, Gautam, the Bank Nifty? The Bank Nifty, yes, has had a few days of a very good run, but are you seeing another breakout soon?
I think so. I think it already broke out a few days back. Our working target is about 60,000. So there is a good 3,000 points to play for even from current levels. And I think it will see bigger targets. I mean, when I look at what SDFC Bank has done in the last couple of days, SBI looking to break out very, very soon, I think, and I think that's coming. And the placement of most of the smaller private banks as well, all very well set up. So I think the ratio charts are headed upwards, which means Bank Nifty is outperforming the Nifty. Until this trend continues, I think our market is safe.
Shifting focus to metals, and here I'm talking about the actual commodities. Gautam, I'm pretty sure that you keep one eye on that when you're deciding what to do with equities as well. And with the kind of messaging that seems to be coming through from the US, it seems that some of those worries on tariffs might actually be behind us. And so therefore the focus once again goes on to whether or not China can get back onto its leg of growth. If that does indeed happen, it's positive for metals and incidentally then for Indian metal stocks. So how are you looking at that picture panning out?
That's exactly our view, and that's exactly the thesis that we are working upon, because the market does not discount something negative again and again. I think it's discounted the tariff news flow over the last 3 months. Things can only get better from here, and the China plus one trade, I think, is going to trigger possibly a large move for the metal stocks. So we remain extremely bullish. I'm looking at a 15% move on the metals index from these levels, something which I don't see in most other sectors in the market. And I think the way some of these top stocks have behaved in the recent past, Tata Steel at 160 plus, JSW Steel, SAIL, Nalco, Hindalco, no recommendations. But some of these top stocks, the way they have behaved in the recent past, tells me that there is a bigger trend for the metals pack. And I think the point that you alluded fundamentally could be the case study behind the rally.
No recommendations, Gautam, but I just want to know whether you're looking more at ferrous or non-ferrous, specifically on the metals, on the metal side.
No, but ask for recommendations. It's good to get,
But he said
get those. It's good to get those from Gautam.
If you are giving recommendations, then please do so. But if not, please tell me which specifically you're looking at, Gautam.
Well, I'll stick to the bigger pockets because you just have 7 or 8 names, so I think the names are quite obvious. But I feel that non-ferrous could do much better over the next 6 to 12 months. Valuations are comfortable, and I'm also seeing these big moves in copper. I think you saw what happened yesterday. Copper, aluminum, some of these base metals are shaping up really well, and I think that's going to have an impact on stock prices here.
Gautam, since we're on the metals, just can't let you go without talking about gold, really. And is $3,500 or the equivalent in INR, whatever, is that the intermediate top, or you reckon there is more in store?
I think it's an intermediate top, so it might take a little more time. And you might have noticed in the recent geopolitical period, gold actually did not do well. And this has happened for the first time in a couple of years. We've been of the view that 3,500 is an important resistance. I think it's just taking a breather. As long-term investors, you stay invested, but there is no near-term opportunity. But as I've said all along in the last 6 months, silver is a big opportunity. It's done much better than gold. The gold to silver ratio has actually seen a breakout. And I do see a very large move move about 25 to 30% on silver from current levels. So I think some silver proxy stocks, they're handful in India, I think make a lot of sense as well.
Okay, just before we let you go, last question, Gautam. Nifty target for this year. 26,000 by when, and what are we ending 2025 at?
26,200 is just few percentage points away. So unfortunately, I don't have a fancy target for you, but I think 26,200 is where we get to. But if everything goes on track, and if I have to take a 2-year view, and I do believe that over the next 12 months we are sorted, then 28,400 is my working number. So as long-term investors, if you are playing the India story passively or actively, 28,400 is your number.
28,400 is the number. Thank you, Gautam. Always a pleasure to speak with you. Gautam Shah there. Remember, 2 years, 28,400 is the number if you want to play the India story.